They're going to go off. All right. Welcome. Hope everybody had a good day. It is Wednesday, May 3rd. We had FOMC today. I did not trade in the morning, but I did trade a little bit in the afternoon when FOMC happened. I took 3 trades, 3 little scalps. I went 3 for 3. I'll talk about exactly what trades I took, how I took them, why I took them, and et cetera. And then we'll go into what we're looking at going into the rest of the week. So first thing starting out, going into today, I decided not to trade, just because it is FOMC. I don't know why this is so laggy. Just because it is FOMC, it's best to just stay away from FOMC days. But the only really times I like trading FOMC is right when, the data comes out, right? Right when FOMC actually starts is when it gets fun. And I like trading micros. I don't really trade, my full account. When I'll start to build confidence with it. And when I do build that confidence with it, it allows you to then use more size on news days. Now, there's, a lot of people will say, news days are bad. I mean, I agree. I don't like trading news days, but I think it's a good way to build confidence, especially in high volatile situations, being able to stay calm and set, proper risk. But again, you will get burned if you do not know, how to, position yourself accordingly. So going into FOMC, I'm just going to start there because the action, the first entire, the day before, or in the morning, was pretty shit. I mean, we can go over this because this is, one thing I would see. So going into the day, we swept this sell side level. We are pretty overextended. We have a massive sell-off. I'm expecting us to retrace back to 50% retracement, right? So drawing in that high to whatever that low is, I'm expecting us to reach discount price and then go back lower. And the reason I think that this was the draw on liquidity once we bounce and not higher, right? Why would I think that this, instead of going back to the highs, why do I think we would sweep this low? Because if we look at a bigger time frame, like the 4-hour, we just recently swept that previous high and we had big selling pressure. So if you were in shorts from up here, your first target is that first low here. Your second target is that next sell side liquidity, right? So my target going into tomorrow, I still think the draw on liquidity is this low now. Since we had this big sell-off, this is giving me a lot of confidence saying that we're going to most likely see a new low put in. So when we get that initial bounce, we retrace to 50%. One thing that I notice is when we look at the 1-hour time frame, notice we have a inverse fair value gap. And when I see, a big sell-off like this, normally I wouldn't really draw in this, right? Because there's no really reason. I know it's there. So what I look for is I look for inverse fair value gaps because this is a big fair value gap. I want to see an area where we can potentially reject, right? So I look past this and notice we have a clean 1-hour fair value gap. And this inverse fair value gap, you then pull this over and this becomes your resistance. Now, especially when this aligns with our 50% retracement, it aligns perfectly with the past weekly opening gap. And we start to see that level of rejection when we come into this level. If we look at that 1-hour time frame, we could not break above this level here. So first thing I want to look at is I do want to see if there was any setup after we did sweep this low. So going into the day, if I was to look at a 5-minute and market was opening, I would want to see higher because at that time we did not yet hit 50% retracement, right? If I was going to draw in my fib here, we never really hit that 50%, right? When we put in that initial high at the open. So I would want to see us sell off to take some sort of low out and then bounce back to the highs. So looking at the 5-minute, the really most prominent low that we have here is this past low here. I wouldn't really put it here because, everything, I would put it most likely here. Once I start seeing buying pressure coming up after we take those levels, let's see if there was any sort of trade we could have taken here. Now, for me, I don't really see anything right now. The first thing I would really look at is whatever has the most displacement first. And the only trade that I would really want to take would probably be this right here. We have a fair value up here. Once I continue to see that, we're bouncing and we have a strong trend up, this is showing me that the draw is most likely going to be that previous high, right? The draw on liquidity is most likely going to be whatever that previous high was. And the reason I think that is right when we take that low out, right here, we immediately can't head lower, start getting buying pressure, and we get, market structure shift. So if I was looking at this real time, it's a very slow and choppy action. That's the hard thing. but I would want to see some, level actually taken out with big displacement. But notice we never really kind of got it until, we kind of broke above, but really, failed to head lower. No really fair value gap here. And then we took this high out. And then this is where I'd kind of, gain confidence in probably taking a trade. You could honestly look to take something out of that small fair value gap. But the biggest thing for me is the best entry would be this. I would consider this to be a clear market structure shift. And the reason I would put it here and not anywhere else is because this is the first high created after sweeping the low where we get big displacement through the level, right? Notice how I could mark in a high here. We never really break through it. All right. And then we create another high. We never really break through it. And then I create another high. We have a small push above and then instantly reject. This is the first high where we get, 2 consecutive big candles through this level. So I would wait for a pullback to one of these fair value gaps. And the reason that I would most likely take a trade in this fair value gap instead of this one is because since we've already had this big move, I would want to draw in whatever that discount entry is, right? So if, we put in a high here and we ended up we never ended up hitting that 50%, right? From whatever that previous low was. So then we ended up coming back to the highs. And now I want to see us come back down to that separate fair value gap. Now, what I always like to do as well is if you have multiple fair value gaps on the 1 minute, up it, right? So then our entry would be on that 2 minute. So we have a 2 minute here. We also we'll see 3 minute because there's 2 there. So then this would be your entry here. Just close it up, right? That's what I like to do. If you have multiple fair value gaps on the 1 minute, look on a bigger time frame. That would be your entry. So we come back stacked up with that 1 minute fair value gap. That would be the best long setup for me. My first target for this wouldn't necessarily be that previous buy side. That would let my runners go. But my first target would be this high. And the reason it would be this high is because we have equal highs here, right? We have equal highs, these 2 little equal highs. This is more low-hanging fruit than this high one is. Since we have FOMC later in the day, right? Just being able to position yourself, taking off profits when you get whatever that entry is. And notice also on a 5 minute, there is another entry right here. You can see that this is the first fair value gap created on a bigger time frame, like the 5 minute, where we actually are showing that strength, right? That's why that 1 minute, for us to find some sort of entry there or trade, we're not showing the strength that I really want to see until we get here, right? Where we get that impulse move and actually create a fair value gap on a bigger time frame. Then we pull back to that and then instantly come up to take, buy side liquidity and that was previous highs, but we ended up, getting taken from FOMC. So that's really the only thing that I saw early on. But let's jump into FOMC. Wait, let me read up on the chat real quick. Why isn't MSS not drawn at 10:40 a.m. ish and pulled across to the big displacement you just mentioned? Why isn't market structure drawn at 10:40? Let's see. Let me see what you. I'm guessing you meant 11:40. Or maybe you did mean 10:40. Why is it not drawn here? Because it's whatever that low that's put in. Now, it depends on whatever the price action is, right? This is all low resistance liquidity run. What does that mean? What do I mean by low resistance liquidity run? There's no prominent high here, which means if we're going to go through this to take buy side, we're going to run all of these highs, right? Because there's no high, there's no prominent high. Every single high is put in is low resistance liquidity because if we're going through, it's not like we're going to take this high out and then go back down. It's not like we're going to take this high out and then go back down, this high, go back down, this high, go back down. This is what we consider to be low resistance liquidity run, which means if I go on a bigger time frame, like a 3 minute or a 4 minute, there's no high here. It's just a straight down move. So all of these previous highs, we don't care about. The only thing we care about is whatever the draw is. And it's that external buy side liquidity level, which is that high that actually got put in. And the only reason that I would care about this high instead of any of these other ones is because we have equal highs here. And it's, a better target than, if you were to let it run to that buy side, which I'd still think you let it run to buy side. You just have to be careful because you have FOMC. So the reason I put market structure shift here is because after that low is put in, I want to see a high get put in. So I don't want to use a previous high because this is all low resistance liquidity. I want to see a high get put in first, right? I want to see structure form after taking that low. and then put in a high and then break that same high, right? Which was we did here. The reason why I don't put it anywhere else is because we get no displacement through those levels, right? This is the first time where we actually get displacement. And that's why that would be your entry and not any of the other ones. Got it? Makes sense? Yeah. Awesome. All right. Took this short on NQ just after market open. Could you go over whether it was a good trade or not? Let's look at it. Yeah, it does not look bad at all. Let me check it. We'll check NQ after ES because I do want to go over the trades that I took for FOMC. So for the sake of this, I'm just going to take off this. So this big gray thing, right? This is the 1 hour inverse fair value gap, right? We have an inverse fair value gap pulled over through that drawdown, acting now as resistance. Remember, we have now reached a discount. Okay, so my bias, right? Right when FOMC happens, I always wait. You always want to be very patient with FOMC. You want to see what kind of move is going to happen, what structure, what liquidity is going to be hunted. That's the first thing I want to see. When FOMC comes out, I want to see liquidity being swept. Now, liquidity being swept for FOMC does not have to be an external level because FOMC is so volatile that most of the time, after the first 30 minutes is when you'll actually get a move. So you'll get a search and destroy setup or a search and destroy model for the first 30 minutes of FOMC most of the time. And then after 30 minutes is when you'll get that trend move. So going into this, looking at my bias, I say, okay, where are we on the charts right now? Well, we just swept that big external level previously in the week. We've had a bigger, massive sell-off, wiping out all of these gains that we made the last couple of days. We're retracing where we can't seem to get over this past fair value gap on a 1 hour. We have slow, choppy move. Notice how when we retrace back up, we have low volume, and then we get strong volume to the downside. Well, that happens later. We've retraced to 50% discount on this big move down. So this is telling me that if we're continuing to reject, the first thing I want to see is this would be the draw. Now, if I zoom in, the first draw would be the previous low we put in here. This is the first draw on liquidity, especially when we push up and take that high out. So what trades did I take? Let me pull up NQ here because a lot of it was based off SMTs. All right. So FOMC comes out. Start chopping. ES takes out buy side liquidity, sells back off. At this point, I want to see either strong selling pressure or I want to see buying pressure. Because right now I'm short biased, but if I don't see strong selling pressure, I'm pretty confident we're going to, come back up and we could take that previous high because that's what I'm expecting in FOMC. Most of the time, the first 30 minutes is always search and destroy. So letting the market do its thing. We have slow action at the start, and it seems that we cannot seem to break lower. Notice how that past 5-minute fair value gap is still acting as support, right? Still acting as support through the entire day of FOMC. We come down, continue to hold this past fair value gap, and it seems that we just don't want to head lower. So then I look at NQ and I see that ES took that low out, NQ did not. So I know that FOMC has fast moves, and I like when I see this kind of action, I can play SMTs a lot better than I could if it's just a regular day. And the reason is because I don't need a fair value gap. I can just enter when I see that SMT formed and have good risk. So that's exactly what I did. When I saw that ES couldn't head lower, right? We're struggling to get selling pressure. We're continuing to hold. And then we form an SMT at the lows. Right when I saw that SMT and I saw that we were starting to bounce, I entered long. So I entered long and I got a beautiful little scalp. I wrote it up. I didn't write it to this high. And the only reason I didn't let it go to this high is because at the time we were forming SMT. See? We were forming SMT and I sold it perfectly because we ended up selling all the way back off to take that low out. So I sold it when we took out this previous little high here, when we bounced off this fair value gap. And that was the first trade, first little scalp that I took. So then I was like, okay, we have a breaker block here, right? We have a breaker block. I pulled that over. And then when I saw the SMTs at the highs, I was like, okay, this is definitely going back down now because search and destroy. Look at NQ. NQ had a big sell-off or had a big push up, swept that internal high, and then we're now forming SMT. So same thing. Right when I see that SMT, I want to see selling pressure going back down. That's exactly what I got. So I waited for, break of the low. Now notice we don't really have a lot of displacement here, and that's fine because since we have an SMT, I'm expecting a fast move. Most of the time, that's what you want to see. If you get an SMT on a lower time frame, you want to see an immediate bounce, an immediate low or high put in once that SMT forms. So that's exactly what I did. When I saw that NQ took that high out, we're forming SMT at the highs, I'm now expecting a search and destroy on liquidity back to sell side. And that's exactly what happened. Now, I didn't let this run as much as I should have because I should have let this run to sell side, because I know most of the time we're just going to go search and destroy on liquidity, which is exactly what we did. We then have our internal sell side right here. I waited for a fair value gap at this point. Once I saw a little retrace back into this, I entered short with a stop at that previous wick, and I ended up taking it off when we came back into this breaker block. Now, it wasn't the best exit. It was good risk to reward, though, 3.5, but I should have let it a little bit more run on the table, especially maybe even just leaving a runner to go to that sell side level. But I did decide to take it off prematurely. Okay, so that was the second trade I took. Third trade I took was back on ES. Let me take this fucking thing off because I can't really see anything that's going on right now. All right. So ES now comes up to take buy side again, right? Notice how we take that previous high out, put a low in, come back, take that previous low, take that next high, and then go back to take a low. So once we take buy side out, I'm still short biased, right? Because my bigger time frame is still telling me shorts. Now this is giving me confirmation that we just swept buy side. This looks to me like a liquidity sweep, and then we're going to head back to that internal low. Notice how we also formed equal lows. We know this is the draw on liquidity. If we look at a 15-minute time frame or any other time frame, notice how we put equal lows in right here, right? We put a low in right here, and we put another low in right here. We have relative equal lows. We know this is most likely going to get hunted, right? When we create a low like this and we bounce, we know this is now becoming low resistance liquidity, and this will be now the draw. So when we see that, when I see ES come up, take that buy side level, and then have an instant sell off, I am now looking to get short immediately. So I wait for an entry. I got a fair value gap. Now notice how there's no break of structure here. Why am I confident trading a short here when there's no break of structure? The reason I'm confident trading this with no break of structure is because I know how the action and I know what the draw on liquidity is. If I'm confident with the draw, then I don't need to see, the cleanest setup that I could possibly see. All I need is liquidity swept and I get a good entry and I'm confident on the draw. That's when you can apply good risk management and confidence to take trades like this. And that's what you have to do. That just takes experience. And that's what I've been focusing on in the recent month. And in coming into this month, my main focus for this month is dialing in on being able to scalp the draw, right? Not necessarily waiting for, right? Because a lot of the times, the A+ setups that we wait for, liquidity swept, internal swept, break of structure, fair value gap. A lot of the times there is so many good setups during the day that don't require those things. And it's just building confidence trading that. And one of these, right? Today I went 3 for 3 and none of the trades that I took were considered what we call A+ setups, but yet I still went 3 for 3. And the reason is because when you trade your strategy long enough, and you gain confidence with certain PD arrays or whatever, things you look for, whether that be SMTs, liquidity sweep, fair value gaps, when you can gain confidence on the draw and able to read a chart and able to read where you think it's going next, you can then apply risk onto whatever trade that is, giving you the best possible setup. Especially during FOMC, when you get, fast action, you can take advantage of those things. So right when I saw that liquidity swept, instant sell off, I wait for the pullback to fair value gap. I ended up getting a really good entry, stop at the previous wick high, and I ended up riding it all the way down to that sell side, that buy side level. Now I took off half my position somewhere here. I let the rest run. I actually didn't put it to break even, so I was still putting my stop here. All those shorts ended up getting faked here, stopped out. I still held my position because I was confident on the draw and liquidity. We came back, retest the fair value gap, and then ended up selling off. And then, yeah, that was the third trade I took. So that's my main focus for the coming month, and something that we'll be going over a lot in the charting session, something we'll be going over a lot in the live sessions, is building that confidence with taking trades, scalping to the, whatever the draw on liquidity is, right? If we take that high out here, what is the next draw? Notice how we cannot break higher. If we look at a 5-minute, not a single candle closed above that previous high, right? Not a single candle. So that immediately tells me the draw is that sell side level, right? Because we're in a range. That's how we trade. We're in a range. We have buy side and external. We have external buy side, external sell side. So I want to see if we can't seem to break higher and we just, don't show that strength. I am expecting a sell-off in the draw to be that low. Now, if I look at a bigger time frame here, this draw now changes, right? The draw on liquidity is this low. This is low-hanging fruit, that previous low. This is really the draw on liquidity. Because if we're looking at that bigger time frame, we've retraced the discount. We're still holding that previous 1 hour fair value gap. When we continue to reject this and we break that low with big volume, this is now the draw on liquidity, is this low. So I should have honestly when I was in the short, let a possible runner go to that low because that was the draw on liquidity, right? But I had to take a final, so I just took it off right before I had to go. So, when trading of confluence of SMTs, how do you know how to trade ES or NQ? Good question. So I get this question a lot. For me, I just trade whatever I like, whatever I think has better action, to be honest. It doesn't really matter because you're going to get a similar move with both. Just trade whatever you're more comfortable with, right? A lot of people are more comfortable trading ES than NQ. NQ moves a lot faster, right? It takes more margin. It depends on whatever your preference is. For me, it depends at the time. It's never, one or the other. I mean, it is one or the other, but most of the time it's, a decision I make right then. And it's mostly because of whatever has cleaner price action and whatever I think just looks cleaner in general. And whatever I think has a clearer draw on liquidity. Whatever I think has a clear draw is probably the one I would trade. How do you deal with all chop and build patience? Also, is it hard to let runners? It's hard to let runners go with eval accounts, so I'm forced to take profits due to threshold. Any suggestions with chop and building the patience for price to hit targets? Or price targets to hit. Okay, so your struggle is having the patience to just let your position play, or is your struggle with patience, patience as in, you're coming to the market and you can't seem to sit still. You want to put on a trade. You don't have the patience to sit there and wait, or it's just the patience, when you're in a trade, letting that price target go. The biggest thing for me that has helped me with patience is having confidence with the draw. When you I hope you guys can see based off of me and how I trade, how confident I am when I trade. I'm very confident. Even if I end up taking a loser, I'm always very, very, very confident, right? I act like it's going to be a winner, right? But I'm not I'm celebrating or being emotional about it. It's just having a confidence to watch it chop and still have confidence knowing it'll eventually go in your direction. And the reason is because you have to understand what the draw on liquidity is. If you are in a position that you end up getting skeptical about because you're overanalyzing, right? Thinking for this a perfect example here. I take a short position in this fair value gap. We sell off, never take that previous low out, instantly bounce and take out that previous high. What is this telling me? A lot of people would end up, stopping out, getting scared. They'd automatically cut their position because they don't have confidence in their trade. They don't have confidence in whatever their draw is. So for being patient, I think the biggest thing is just having confidence in your trade, right? You're taking your trade for a reason. You must have some sort of edge or some sort of confidence with where you think the charts are going. It's just sticking to that idea and not overanalyzing. Now, there are times when you do need to overanalyze, right? And it's good to recognize situations when the market could go against you, right? But not to the point where you're ending up breaking your rules, right? Your stop loss hasn't been hit or whatever it is. Your price target hasn't been hit and you end up cutting it off beforehand. So if you struggle with that also, put your put all of your limit orders in your DOM and just walk away. Right when you enter a trade, put your stop in, put your price targets in, and just walk away from the screen. And that's it. Because if you end up just sitting there watching price action go back and forth, you're going to overanalyze. You're going to second guess your strategy. You're going to second guess the trade idea you're in. And then you're going to end up taking it off before anything happens. And then right when you take it off, it ends up going in your favor and all your price target gets hit, right? Because you're letting emotion and the psychology of it get in the way of the actual trade itself, right? You have to have patience just to sit there and understand that the market is going to do whatever it wants to do, right? You cannot take it personally. You just have to let the trade play out how it wants to play out because it'll be different every single time. Every single time it'll be different. It's not going to be exactly the same. So you have to be able to just apply risk and let the trade go. And you only touch it if your stop loss or your price targets hit. That is it. You will never see me. I mean, there's a couple times when I'll take my trade off before anything's hit because I'm confident that we're going to bounce or we're going to do this. But most of the time, you will never see me take off my trade unless my stop loss or my price target has been hit because I have the disciplines to just wait and be patient. I can wait for the play. I don't have the patience to let the play go and runners go, not oversizing or anything, just afraid that it will go the wrong way. So that's why, okay, this for example, that's why you have runners, right? That's why they are runners, right? If they're runners, that means you've already secured profits. You've already made money on this trade. There is no way for you to take a loss on this trade, right? Because if you're taking profits, that means after that 50% off or whatever it is, your stop should go to break even. And then that's a risk-free trade at that point. It's risk-free. You shouldn't even care what happens next because you already made money on it, right? So let that runner go to whatever your stop loss is. And if it gets hit at your break even, okay, so what? So what? You still made money on the trade, right? In the days that you have the patience and the discipline to just let the runners go, the market will reward you for that. How do you know when internal level being swept will lead to the next high/low external versus when the internal sweep will act as fuel for the next move? Where you would get an entry? Let me reread this. Let me try to understand. How do you know when internal level being swept will lead to the next higher/lower external versus when the internal sweep will act as fuel for the next move where you would get an entry? Okay, I'm trying to understand like how do you know that after taking a level out, we're going to go through it or, go back to sell side? Is that what you're saying? Okay. So that's why viewing different time frames is so important, right? Like for this trade specifically, the reason I think the draw is lower than it is higher is because I zoom out, right? The draw, in my opinion, is this low. And the reason is I have to zoom out, right? I always have to understand the roadmap of whatever we're trading. Every time frame is important. Looking at a 4-hour, right? Looking at a 4-hour. The last couple days is the most important thing, in my opinion. What has happened the last couple days, right? That's the biggest thing. Well, okay. I know that we have a buy side liquidity that got recently hunted a couple days ago. What happened after we took that high out? We instantly sold off. All of those gains that we took out instantly sold back off. Okay, now what? Well, zooming back, going to a 1 hour here, we put a low in here. We swept that low here. Now we're starting to bounce back. Okay, why do I think that the draw is not this high, but this low on a bigger time frame? The reason why the draw is here and not here is because we already swept that buy side level. So what's that previous low? If we were to draw in a range here, right? If we were to draw a range, we have a high that was put in, and then we have a low that was put in all the way here. So after we take that high out and we end up selling off super strong back into the range, my bias then switches because this now the biggest thing with understanding how the market or what the market's going to do next after taking a level is you want to wait for the reaction, right? Because our job is to react, not predict, right? That's why I don't just enter off of, going short, because sometimes it'll just go right through the level, right? So I want to see how the market reacts after we hit that level, right? So when we wake up in the morning and I say, I'm bullish until this level gets broken, I'm saying I'm bullish until this level gets broken and we see some type of reaction, right? Because we could end up going through a level and just, going up to, whatever the next level is. So I want to see what happens after that level is taken out. So for example, after we take this high out, do you see us going, higher, showing strength? No, we show instant sell off, right? We're showing super weak after having a big, strong, push up. So after we've swept that high, we instantly sell back off into the range. This is showing me that the draw is going to be whatever that previous low was of the range. And at this point, we zoom in and the range is now this, right? Because the range is now whatever that high is after we swept that external level. We've discounted ourselves, pushed back inside this range. So I'm most likely expecting a sell-off back to whatever that previous low was, which is this right here. So now zooming back out, that range that we're in is this whole entire range. And the low of that is this previous sell side, which is right here. So when I see a sell off, take this low out, I'm confident that this is now the draw. So how do I find the best possible entry? Well, I want to see a retracement, right? Because especially if we sell off this, this much, I'm not expecting a continuation lower. I'm expecting at least either consolidation or a recovery bounce, right? Because price always needs to rebalance itself. That's why premium and discount is so important. That's why we draw in our fib. So I want to take that high, that previous low, and I want to see us come back to discount first. That's number one. If I'm short biased after we get this sell off, I want to see us retrace to discount first. So that's exactly what happens. We get a bounce, we retrace to discount, and I pull back that 1 hour inverse fair value gap. Because we have a massive move down. I don't want to draw on that biggest thing. So I want to use, if anything is in the past, can now use, give me some sort of idea of what's going to happen next. So zooming it back in now, when I see us continue to reject this, I know that on a bigger time frame we're bearish. On a bigger time frame we've hit discount. So the draw now becomes this low. Notice how every single time we take a high out, there's no strength through it, right? Every high that we get put in, there's no strength. We have a high here, then we have a high here, and then we have a high here. Every high that gets put in on this recovery bounce, there's no strength, right? There's nothing. So this is showing that if we get a high that's swept and we get large selling pressure, we're most likely going to go to the draw, which is this low here. Does that make sense? The masterclass that you are offering, how good of a trader should I be after the class is over? Class for me is being tested throughout. Will we be tested? I want to take the class and be self-sufficient soon after. It doesn't work like that, brother. You have to put in the work yourself. Again, you can watch a bunch of videos, but if you don't put in the time and experience to learn it yourself after taking the information, then you won't be able to. You won't be successful. The class is very, very, very valuable. There is a lot of education that is going to be in this class. It is up to you to take that knowledge, take that information, and then apply it to yourself, your trading, and gain experience and confidence using what you learn in the class. That's why a lot of classes in high school, you don't remember shit from because you're not interested in it. You don't fucking care to learn. You have to care to learn because if you go to a class and you're not focused on learning the content and then applying that content in your actual life, then what value does it have to you? It's just videos at that point. So yes, the class offers a lot of value, but it is no value unless you take that knowledge and education and actually use it and implement it into your life and your trading. Was there a long on ES 940? Let's check. Is this where you said 940? Is this where you're want me to look at? Making sure this is the right time. No, I would not take a long here. And the reason is because we have equal lows below us. And just very choppy action. I would definitely not take a long there. Now I would take this short. Once we sweep this high, we have equal lows below us. We sweep a high, instantly sell back off in this range. You have market structure shift, right? Now it wouldn't be here, it'd be here because you get displacement. Then you get that fair value gap. So this would have been a nice short entry targeting equal lows. This would have been a really nice short. Stop, I'd probably just put it like up. I'd probably give it a little bit more room on this, like probably just here. And then I'd let it go to those equal lows because we know draw on liquidity is now equal lows. I think my issue is seeing an internal level taken and immediately assuming the opposite level would be taken and not really taking into account the reaction from the first level being taken. Just trying to look for setups in the opposite direction right after an internal level was taken. Yep. You always got to be aware of where we are, zoomed out, right? Any last questions, guys? Got to go. Please post this one. I will for sure. Polar fair value. Yeah. So inverse fair value gaps. Inverse fair value gaps. We've talked about them in the past, but if I see a fair value gap from the past, right, and I'm bearish, let me just pull up ES here. If I'm bearish and we have a fair value gap from the past, a bullish fair value gap, right? Because this is bullish, right? We have a big move up, pull back down. I'd want to see this, hold if I'm bullish. If I'm bearish, I want to see us go through this and then retest this. And I want to see this act as resistance, right? And that's exactly what happens. So I take that past fair value gap and I pull it over. Let me see if I can find an example here, maybe from today. Again, a lot of the action is very choppy, so it's kind of hard to tell. Now, I don't really see any examples today. Yeah, I don't really see anything. Well, I mean, this is, that's not really inverse fair value gap though. Never mind. Let me see if there's anything here once we took that low out. I mean, I guess you could do this. Okay. This isn't the cleanest example, but once that sell side level, right? Because we have that low that was over here, right? This one right here. Once we take that out, right? This is all low resistance liquidity, right? It's low resistance liquidity if you draw a trend line in and it just kind of, follows along, right? That means all these highs are most likely going to get swept. Notice how we have a past fair value gap right here, right? We have a bearish fair value gap, right? So if I'm bullish, I want to see us go through this fair value gap and then act as support. Once that happens, I can then have my bias switch long, right? So this could also act as a market structure shift. If you gain confidence with this strategy and you see it long enough and you gain experience with this, when you can see a past bearish fair value gap turn bullish, that is a good thing to see if you're flipping your bias, especially how we trade. When we see some sort of liquidity being swept, in this case, it was that previous low. Once that happens, notice how, we come up, we can't break it, right? No market structure shift yet, can't break it yet. And then we get above it, right? We get a clean break back above that previous fair value gap. What happens when we retest that? It then acts as support to the tick, right? To the tick. We end up holding 5 candles worth of pressure going into this. And then we have just straight up from there. So similar with, what we have here on the 1 hour, is if I'm bearish, I want to see that bullish fair value gap get ran through and then act as resistance to then head lower or then head higher, whatever it is, Great today. What is the next sell side on NQ 128 or 1 hour? Let's check. So we saw that in fucking model. So NQ just took that low out. Now, keep in mind, we do have this 4 hour fair value gap here, or 4 hour breaker block. Sorry. Take all this old stuff from the lows. Now, on a bigger time frame, I would still want to see some more to the downside, because what I'm expecting to see in the coming days is this. I'm expecting to see this. Oh. Notice how ES is already at this low. We are, 7.6 to, 6.8. We're, like 8 points away from taking out that sell side level. Look at NQ. We have all of this room to go. So if we end up getting a sell-off on ES, we most likely are going to take that low out, but NQ probably won't take that low out, right? So I'm expecting to probably form an SMT at the lows. ES sweeps that sell side level. I don't think NQ will sweep that level. And then we'll get a bounce from there. That's my prediction. Regarding your first trade, did you ignore the opposing 1 minute market structure shift because of draw and it was higher time frame trade? Regarding the first trade, did you ignore the opposing 1 minute market structure shift? Are you talking about the trade the scalp on ES? Are you referring to this one? The very first one. Are you talking about this one? Okay. Regarding the first trade, did you ignore the opposing 1 minute market structure shift because of the draw and it was higher time frame trade? What do you mean the opposing market structure shift? The only market structure shift here is long and it's in my bias, right? Because the only way you can have a market structure shift is if some sort of liquidity is taken. And at this point in time, the only thing taken is sell side. Looks like the market structure shift went short again. What do you mean? Are you thinking like this? Is this what you're thinking? Made a lower low. So it doesn't matter. The reason it doesn't matter is because you have to zoom out, right? On a 1 minute, you might see that. Notice this is all low resistance liquidity run, right? There's no high here that's being swept for us to go lower, right? The only thing that we can see is if we go to a 5 minute, we swept that previous low right here. So we swept that low and then instantly started getting bought up. So what's telling me? If we sweep that low, have instant buying pressure off of that, that's telling me the draw on liquidity is that previous high. Yep, higher time frame and draw. Before we look at take sell side for ES at 4068, we're looking for a retracement into a 1 hour fair value gap or just a bounce off sell side. I would want to see some sort of internal structure being formed first. Again, right now, this is just terrible action. It's just straight move down and then just slow chop up. So I want to see some more. So right now, I'm not looking to take anything on ES until we get more structure first, or we just might just sell off, take that low out, but we'll see. All right, guys. I think that's all I have for you guys tonight. I hope you all have a great rest of your night. If anybody has any further questions, feel free to at me in the Discord. I will always be there to help you guys. Honestly, this was a really good session. A lot of good topics. I will post this recording so you guys can go back and watch it if you would like and get some more out of it. Enjoy the rest of your night. I will see you all tomorrow morning for live trading. Much love, guys. Peace.